Yo, good morning. 6:20 a.m. It's February 23, 2026. Backtesting still. While taking a live trade. 2 in 1. Okay. So London took all these highs. Let's see. I'm gonna get into that, fill up that gap right there. Or, into the sea of manipulation up to the upside. So you see an S&T diversion heading upside. We did take all these highs, liquidity marks. So we did take our 1 hour high liquidity mark. We took our 4 hour liquidity mark. We took, and then we took out previous daily highs to take those. Now what we're aiming for is a 4 hour low, previous daily lows, and then we got the London lows and we got Asian lows. We also have these lows down here. We also have those. So we gotta hit the gap right there. So what we're gonna wait for is a retracement. So we got a liquidity sweep. Liquidity sweep to the upside. Now let's see. Our 1 hour chart, what is indicating this? Like I said, we swept those highs, 4 hour highs. We swept the daily liquidity highs. We're basically aiming up to the upside right now. It is looking kind of bullish to the upside. So we can get a retracement back to this area and then see if we can get a swing inversion back to the upside. That would be perfect. And get a little retracement back up. Or if it passes by and it goes all the way through, we could just aim at to these lows down here. But if we go to the upside, I'll just take a 2.1 ratio risk reward. But let's see, it looks bullish. See our 4 hour chart. It looks like a 4 hour chart. Very, very bullish. Perfect. So listen to that vision. It was like right there and there. So that's perfect. Let's see our 10-minute, 15-minute, 15-minute. Yeah, we brought that gap in. So 15-minute, 5-minute. Since we brought that 5-minute into that gap, see if we can break structure. So you can break structure into it. Into that. Break structure, or we can break structure to the upside. Either which, both could be perfect. All we want to see is a pretty good retracement into it to bring it back down, load retracement into the upside. So let's see if that happens. A little retracement back to the downside at least. Okay, so we did touch the middle of the fair value gap there. Our fair value gap, if we would have put it on the 30-minute chart, what is it? 30-minute chart. Let's see, we got the not even. Let's see, I think it's 1 hour chart. So we got this gap right here. If we can reach that back there, would be perfect, that little small gap. So we got a liquidity sweep from the upside. Now we can see a retracement back to the downside. At least fill up this gap. If it fills up this gap and then heads back up, that would be perfect. We can go ahead and set up our entry level. I mentioned before that I should have had marked my lows and highs first at the beginning of the mark. So if we would have been playing, entry level would have been up there, but it doesn't really make no sense. Slowest to recent highs would be this one. Yeah, but I want to see a retracement back down to the downside. I don't see anything, any other fair value gap that would retrace it back down. We do see a break of structure here. Just created a new break of structure. Because we broke structure to the downside, so we do see the break of structure right here. Structure there, break of structure down here, break of structure right there. Broke structure up to the upside. We just touched this fair value gap. That's the only thing that I'm concerned about. Do we see another fair value gap? I mean, we see this little impulse candle right here. But is that a really fair value gap? Traced it back up. So if we can reach it back down to that side, we can aim to highs. There we go, retraced it back down to the downside right there. So that's perfect. That's perfect to the downside. Now we would mark our lowest lows, so lowest highs. From here to up there. To up here. So we can get an entry level there, because we did create a big impulse fair value gap here. To do this one. Entry level would be there before we enter. I would have had a look on this candle right here, so it would have been on this candle still. And then we would have gone to our 1 hour chart. Retracement, bearish. Okay. You want to see your trend was scaling up the whole time. went up, then retraced back down, went up, retraced back down, went up, retraced back down, and then it should go up again. We got this relic up here. Still gotta find a retracement back here. The retracement entered on this candle. Entered on this candle. Oh. Before we would have entered, not gonna lie, we would have had to see if we could have at least find another breakup structure area. Breakup structure area here. Or would it not fill up like this area right there? There we go, breakup structure area there. It kind of didn't seem a pretty good area to enter, since I didn't get no impulse candles, no anything like that. I was just accumulating on that area. So I would have not entered at any of these, not gonna lie.